Good morning, good morning, good morning, everybody. Today is on the third of the third of March. Right, look at what gold been doing yesterday. So yesterday we are looking for buys. We look for buys above this point. We're seeing like potential buys above this point. So once we got this candle closing above over here, um, kind of thought that the market would continue going up, but then after this candlesticks over here, these are the doji candlesticks showing that indecision is happening between the buyers and the sellers. I kind of waited to see how this candle would close, but then this candle closed bullish. So I was hoping to get a buy. So I took my buys, and then all of a sudden the market went down. Stop loss was way down here. Then it wasn't hit, but then it got to a place after all this consolidation, I decided to just cut it. I got out. Then this point we had this huge drop that happened and continuation to go down. But then the good thing is the market came back to my buy limit. You remember the buy limits that we're setting? One over here, one over here. They got activated very well and the market went all the way up. So it came down this week, picked my buy limit, picked the other buy limit, of course, activated this one, and then went back up. Missouri, take profit one, two, almost to three, but then now pushing down. So I got out from this point, exited. So it was a successful day. The buy limit paid me at least, even if the buys didn't really work out. The buys didn't really work out. Of course, it's a new high, so yeah, we could. We that is expected. Okay. Right now, what I'm seeing right now, if I'm looking at the structure right now, what I means that this is in 30 minutes, it's like the market is forming, starting to form some lower highs. But let's see, let's see. We gotta check on what do we have fundamentally today. We got the annual budget release is gonna be in, and yeah, the weather was already spoke already, so nothing much. So let's do this. Remember what I said in the evening? I was telling you yesterday, New York session would come with great. This is New York session. New York session opened and pushed the market down to make this low. Why would they do that? They would bring it down to this point because this is where they closed on Friday. Then the market opened and started going up. So the New York opens again. They're gonna want to the banks wanted to take the market back to where it closed so that they can continue with. All right. And again, the same time, close the gap. All right. Close the gap that was here. You can see that, eh? All right. Let's do this. Price action, basing into market structure, monthly low over there, monthly high over there. Weekly, we got a weekly low, rolling about 8 points. The low, we look for weekly high, uh, same as a monthly high. Daily, we got a daily low over here. Using this as a daily low. Daily highs of this week, previous yesterday's high. Okay. 4 hours. Gonna go on 4 hours, gonna 4 hours low. So 4 hours low is down here, but I'm gonna use the bodies over here. I'm gonna use the bodies over here for now. Then I'll adjust it as we go down. 4 hours high, so there. I know. 1 hour. Right, so we readjust this one to the bodies over there. This one stays up over there. And go down to 30 minutes. 30 minutes, readjust this to this point. That's where the market is. And if we look at it, it's just like the market has just broken the 30 minutes low. Okay. The candle is still active. It's not hasn't yet closed. But then again, we expect over here, we expect the dilly dallying of the market from this. See, there are weeks over here before weeks over here, weeks, and yeah, so that's where the market is right now. So let's see how okay, this candle just closed. All right. But then again, it's already too far gone for you to take in a sell from this point because if you take a sell from this point, then that means you need to put a stop loss above this point, which is way too far than where you're going. So you gotta make it make business sense. Okay. So we're at that point right now. This is where we're seated at. I think I'm gonna use this area. I'm gonna use this area here and say this is where the market is sitting at right now. So let's see how that kind of behaves. You could take some impulsive sales, but then again, stop loss will be it's way too far. I don't really like the way that the stop loss is all the way up here. If the stop loss heads, if we had a structure, let's see, let's get a formation of a support over here. If we have a formation of a support, like maybe this kind of closes like that, and then the other one closes it down like this, then now we could start looking for sales below that point. But at this moment, this is in 30 minutes, this is the area that we need to be checking at that point because that's where the market just stood. All right, so this is the previous candle, and that's where the market is. I don't really like how it looks because again, it doesn't give you a lot of options. Yeah, it doesn't really give you a lot of options. So here we can say impulsive sales. Impulsive sales below here. Impulsive sales will be just sales that you just get in, you don't wait for confirmation or anything. But we could take some buys from above this point. Issue buys about here. That will work. Issue buys from this point. Impulsive sells from this point. Okay. It's gonna be pure. If you wanna do then what? Yeah. Let's do this short position over here. But that's gonna be pure impulsive though. Short position. It's gonna be pure impulsive. The safe sells for me. Safe sells, I would say at least below this point for the next some safe sells to go down. That would make sense too. But now one position buys over here. Anticipating to go to that point. Should we have the powers or the pressures to do the same? All right, so let's wait and see how this one closes because again, this is also a very nice trading range. But then let's wait for this coming range first. At least the 15 minutes or the 30 minutes candle. It's going to direct us to which way that we're supposed to take from this point. So that's going to be really good for us. All right, let's wait for this candle to close and see how it closes. Either way, impulse entrance could happen from this point and then put your stop loss probably around this area. And that's, yeah. And then I just wait to see how the market will happen. Yeah? All right. That's all for the day. That's what we're going to be looking at. Risk manager trades well. Trade what you see, not what you think. And like now, don't trade what you think. See, right now, it's you. If you take the impulsive trade, you're going to be taking what you think should happen. But then again, there's also a possibility that this candle will flip and then go up. So let's see. All right. Great. Thank you very much, guys. Have a good one. Very good to see you, not what you think, and respond to your as well. See you tomorrow. And bye bye, everybody.